Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Thursday the 20th of the 5th, 2021. Time is 0440 GMT, Asian session coming to a close, European session firing up, our lunchtime North American session. Right, Wednesday the 19th, yesterday we had a positive opposed driver in the dollar, plus 158. Front and back door flows mainly coming out the pound at 116 and the euro at minus 47. The yen was the positive rock at plus 5 and activity was plus or minus 163. Intra week then, this is from Monday the 17th open to about 15 minutes ago. We've got a positive opposed driver in the euro at plus 73. Front and back door flows mainly coming out the dollar at minus 53. Out the pound at minus 31 and the yen was the positive rock at plus 11, activity plus or minus 84. Right, what else we got? Intraday then, so this is from this morning, Asian session on the 20th to about 15 minutes ago. We got a negative opposed driver in the pound at minus 31. Front and back door flows mainly going into the yen at plus 26, into the euro at plus 11, and the dollar was the negative rock at minus 6, activity plus or minus 37. Right, what's going to knock it about? What have we had? We've had AUD employment change sort of early morning, which was negative, and yet the unemployment rate was positive. So we've got a slight issue there. German T2 prices paid, production prices coming up, and the ECB Lagarde speech is coming up today as well. Friday tomorrow then, AUD retail sales, Euro German manufacturing PMI, service PMIs, Euro PMIs, GBP PMIs, and the CAD retail sales. Right, so we've got inflation data coming up, and if you look at the overall situation, we had the Fed minutes last night, which basically everybody was jumping all over this comment about that some people were considering a reduction in asset purchases due to the inflationary expectations, and in other words that's code for they were going to taper, but this is all just like hot air, quite frankly. Anyway, so that's where we are. I'll just get rid of this and we'll look at the flows and the asset classes. Our trades are significantly better. We're looking at about nearly 5,000 points profit, 4,900. It's been higher, but it's come back since the dollar's improved. Right, so let's have a look. Euro is strong, except against the yen, the CAD and the AUD, which are stronger. The yen is strong, except against the CAD. The pound is weak across the board at the moment. The Swiss franc is weak, except against the pound and the New Zealand dollar. The CAD is strong across the board. The AUD is strong, except against the CAD. The NZD is weak, except against the pound, and the dollar is weak, except against the pound and the New Zealand. Right, so what have we got? We've got pound weakness across the board, CAD strength across the board, Australian AUD strength as well. So that's what we're looking at. Sorry, I've cut myself shaving today, so I'm leaking a bit, but there you go. Anyway, so what we'll do is we'll move on to the asset classes. Right, so let's have a look. We've got the US dollar index, which has had a little bit of a bounce. I mean, they're looking for an excuse to bounce it due to the positioning. US dollar index. So what have we got? We've got basically it's just bounced off this double bottom here. It's 0.17 from the floor. Gold had a double top, it messed about, and it's basically at 0.28 from the model high. Oil's been having a bit of a tough time, 0.45 from the high. This is an Iran deal they're going on about. Wall Street broke, and it's come back and it's still looking soft. It's 0.37 from the high. S&P double top, broke, and it's about 0.25 from the high. Tech broke, came off, and it's now about 0.45 from the high. Tech's still pretty soft. US 10-year on the bonds. We've got this sort of situation. It's about 0.4 from the floor, and the bund is, you're looking at a much lower yield price, so you've got a higher yield. So to put that into English, basically this is the price for bonds, the graph. The bund German yields have improved, and they're outgunning the US yields, and this is likely to have a positive effect on the euro dollar, although we've had a blip in a rise in the dollar short term off the back of these tapering Fed comments. Right, so what are we looking at now? Copper had all these pumps basically, and then it's come back. It's 0.4 from the high, and US steel basically sold off at the double top. It's about also 0.4 from the high. So US steel hasn't really fired up either. So that's where we are. As I said, our trades are significantly improving. Finally, we're likely to see a bit of a pullback there. They're likely to end up at about 3,500 profit. 1,500 points is likely to come off, and one would think. So we're short the dollar against the euro, the pound, and the AUD, and we're short the NZD against the euro, the pound, the CAD, and the NZD. Sorry, not the NZD, the AUD. Right, so that's where we are. Basically, we're running into the weekend now. We've got all this inflation data coming out tomorrow, the PMIs. PMIs are going to be an indication of inflationary expectations. It's going to sort of reinforce the narrative on this Fed view, but really you might just get as we said, you're going to get a short covering on the dollar. Our positions will worsen. Crypto's getting absolutely hammered off the map at the moment due to various comments. Gold's getting a bounce. Oil's soft. So ultimately, it's going to be messy end to the week. But going forward, these basic positions will be fine and strong. So that's what we're doing. Hope that was helpful. See you tomorrow for the daily briefing. Thank you very much.